Welcome to Business Live. I'm Mark Croskery. In BL tonight, first up, we've got MailPac Group trading in their shares. A sale here. Director selling 75,376 shares on November 16th, 2020. Next up, we got SOS, that's Stationery and Office Supplies, declaring a dividend here, despite the results being quite off, just above break even. SOS did say in their management discussion analysis that COVID really has been hitting them hard in terms of revenues and profitability. But the board met November 17th, 2020, and the board approved a dividend, Jamaican 8 cents per share, payable before Christmas, December 17th, 2020, if you're an SOS shareholder. Next up, we've got Victoria Mutual Investments, ticker symbol VMIL, trading in shares as well. A sale, an executive manager selling 400,000 shares on November 16th, 2020. Great to see. Not all companies, in terms of disclosures on the JSE website, jamstockx.com, going to tell you whether it's a connected party, a director, but going to this granular disclosure transparency. So great to see with VMIL telling you it's an executive manager. It's good to get that information as a shareholder or market analyst. Now diving into earnings, Jetcon Corporation, the used car dealer, an improving Q3 or third quarter here compared to year-to-date numbers, as well as the second quarter. It is great to see for Jetcon. Things were looking a bit, grim year-to-date, and especially the second quarter. So some better numbers here, showing some light at the end of the tunnel for Jetcon. Revenues declined nonetheless year over year to 153 million Jamaican dollars from 280 million Jamaican. But the key factor here, Jetcon made a profit hitting 2 million Jamaican for the third quarter, getting that profitability ramping up after the loss in the second quarter. How did they do it? Stronger gross profit margins here and strong balance sheet management. That's a key thing. They stopped buying the cars, as I said, in the management discussion analysis in the second quarter, third quarter, sold down that inventory below 400 million Jamaican and got those profits back up, got the cash into the balance sheet and the business. Last up, we got ISB Finance. And talk about ISB, defying the trend in the microfinance sector. We carried a couple of companies on Business Live on BL who've been struggling, booking those credit losses or those provisions in terms of the microfinance book. But ISB, unlike some of their comparatives, having a nice third quarter here. So what did they do? They grew the loan book. ISP is a smaller loan book in the microfinance sector. So that's working out for them now. But net profits, Jamaican 20.5 million Jamaican versus 11.8 million Jamaican year over year. But how did they really do this? Now, what they did actually, even though revenues declined by 8 million Jamaican year over year for the quarter, and they still got this profit way up, staff costs. What they did, clearly the management, the board of directors, is staff costs fell by almost 16 million Jamaican year over year. That's where the profits came from. I'm Mark Croskery. This is Business Live.